Hello everyone, good morning. Welcome to another stream. I think we're live, right? Yeah, we're live. So today's CPI, right? 8:30 we had inflation. I'm actually curious what the inflation report is, but it doesn't matter what it is to my trading. I know some people it will though. The inflation rate, the core inflation rate is, I think, yeah, it excludes the most important the things that everybody uses, which is food and energy, and it excludes it. Like, what the fuck? I don't care about this interest rate. But it did go up, which is good. That actually means it went up more than what the Federal Reserve expected, which means that and I guess with food and energy it didn't really go up much. But the fact that the core CPI went up, which is what the Fed looks at, I'm pretty sure, is kind of crazy, because what it shows you is that the economy is not slowing. And if it's heating up, if anything, the Federal Reserve should not be cutting rates. Like, this is proof that the economy is picking up. So maybe that's part of the reason why we've went up. But I think that, again, the algorithm would have shown hints of us going up before, and as you know, before we actually, like, people know what the CPI will be before it comes out. CPI doesn't just come out and then big money reacts to it. Anyways, I don't believe that's how it works, but like, yeah, so obviously with the CPI going up, that's inflationary. If anything, the Federal Reserve should be raising the rates right now. So a lot of the people were expecting rate cuts this year. I mean, I think the odds of rate cuts have went down even significantly lower this year. So I don't think we're having a rate cut. Anyways, let me go through what I want to look for here. So for me to trade, let me erase what I had from yesterday. For me to find a trade here, I need a 5-minute short-term high to be taken out. And I wouldn't consider this a short-term high. So if we come up here and take this out, I still wouldn't want to trade, because we had a bit of whatever back here, so it wasn't really a clean move down up. But I'm going to wait for shorts, because we're way above 8:30 open. So I really can only look for shorts here. God damn. My model could show up today, but the likelihood of it showing up today is not as high as it would be for Thursday and Friday. So if it could show up, I'm ready for it in case it does, but it might not show up too. Like, the likelihood of it showing up is meh, because CPI has made a large move. I don't know. I'd be waiting for shorts though. I just need to see a 5-minute sweep. I'm gonna scan the other markets while I wait for my model to come. So I mean, this is good. All the other markets are moving together. This is very good conditions, so I like that. It seems too uncorrelated. That's really good. Gold is still lower. Dollars kind of consolidating. I don't know if anybody's heard the news, but tariffs were paused. I see I have one viewer in the chat. Welcome to the stream. Feel free to drop in and say hi. So I'm just curious to know who you are, and like the video if you can, if you don't mind. But what was I saying? Yeah, U.S. put a pause on China tariffs, so for 90 more days. So for 3 more months now, we don't have tariffs on China. I swear to God. And like I've always said, that the only reason there's tariffs is to gaslight people into thinking the economy is going to be inflationary, so that the Federal Reserve can keep their interest rates higher for a longer period of time, which moves the neutral interest rates up and tightens that gap between where the Federal Reserve interest rate and where the neutral rate is, so that when the Federal Reserve cuts the rates, they can have more of an impact because they'll be able to cut them further beneath the neutral interest rates before hitting 0% interest rate. Because the problem they had for 10 years, from 2011 onwards, onto COVID, was they had low inflation, low unemployment, historically low unemployment, but low interest rates. So the fact that they had low interest rates wasn't pushing inflation up. And if it wasn't pushing inflation up, then they wouldn't have any space to cut rates if ever there was an economic crisis. So they were in a really bad position where their monetary policy of setting the interest rates wasn't working. So now what their monetary policy is, to regain the ammunition they need to cut the rates, which is to push the neutral interest rate up so that they can cut beneath it before they hit 0. What they need is to communicate in a certain way that gaslights people into behaving a certain way to push the inflation up, since it wasn't going up by the employment being low. Usually when unemployment's low, people are employed, they spend money, and inflation goes up, and it's a cycle. But it didn't occur, and it's probably because of the wealth gap. So instead they needed a way to gaslight people into expecting higher inflation. And I mean, for all I know, the inflation numbers would also be fake. I don't know. They do. The Reserve does say for national security reasons they can, slightly misreport the numbers, but still the numbers are looking at, and we see this morning inflation has went up. So we're not in a cooling economy, and the Federal Reserve has no reason to cut the rates. So I don't know if they're gonna cut in September, but so far with the August number for inflation, we're gonna wait to see the unemployment number for September. But it doesn't look like they need to cut their rates at all. And they're just going to continue doing what I've always said they're doing, which is keeping interest rates higher for longer, and allowing the neutral interest rate to rise and get closer to where the actual interest rate are, so that they can cut in the future and actually have effect. So basically, what I take away is that the way the Federal Reserve is conducting themselves when it comes to monetary policy is through communication, not through actually setting interest rates. It's all about communication and the way people perceive the economy. Anyways, I see I got 2 viewers, so welcome to the stream. Feel free to drop in and say hi, just so I know who you are. And please like the video if you can, if you don't mind. I'd appreciate it. Right now, again, for those that don't know, I'm waiting to see if I'm going to have a trade. I just need a 5-minute short-term high to get swept, and then I can start looking for a trade. But until that happens, I'm not going to be looking for anything. So I'm marking out the 830. I'm a bit sick, so I apologize if I cough. Yeah, I've been really sick. If I don't get a trade, I have one of my students that's been backtesting a lot, and we're gonna hop on a call possibly, and basically what I'm trying to do with them is they're trying to figure out their model. So they've been backtesting a certain model, and they're just trying to refine it to make it so that like for example, news, they're looking at news, and they're like, okay, if I add news to the equation, if I only trade on news days, is it going to make me more profitable? But to do that, you need to have data, backtesting data, and so they went out and got the backtesting data, and now they're just about to analyze the data and be like, okay, what can I do to make this more profitable? So if I don't get a trade, I'm gonna hop on a call with them, probably still on stream, and I'm gonna kind of show that process of making your model more profitable, what you do to make that model more profitable. That's important. It's very important too, where you don't actually switch models just because you lose a lot. It's better to continue trading the same losing model, and then looking at the data and seeing what happens in common when you have losses. So when you encounter so many losses, you want to look at what's going on in each of those losses in common, and you want to cut that out. So then you reduce the amount of losses you take, and you focus more on what happens in the wins that's in common that doesn't happen in the losses. Like for example, it could be the higher time frame bias. It could be a sweep. It could be a certain key level on a higher time frame that's not there when you lose. I don't know, but that's going to be their job to figure out, and I'm just going to help them do that this morning if I'm not going to trade. So I'll probably know soon enough. Right now, either what's going to happen is it's going to come up here to this high and it's going to continue moving higher. So we had the initial move at 8:30, and at 9:30 it's going to make a second move higher, because this is very bullish news. So that could happen. And I don't see anything that goes against that. So I mean, we've taken liquidity up here, right? The all-time high. Well, not really, actually, this is all-time high, but we do have buy-side liquidity up here, so that's why we could come up here and take this out. And then I'd want to see how it behaves after taking out that level, because right now what I'm seeing is it took out the previous day high, and it pulled back, and now it's back up here. So I would expect it to continue moving up to this high, and I don't expect my short to be there yet. But once it moves to this high and it moves to buy-side liquidity, I want to see if it's going to continue, because it would need it to expand quite a lot. And I feel like, if anything, we're probably going to consolidate or continue moving higher. I doubt we get a nice pullback where I could short on. Like, I'll be honest, the move of the day right now has probably already been made. You know, we've had a very large, nice expansion due to CPI, and if we have that second expansion to the buy-side liquidity, I'm not going to get my short. I'm just not. But we'll see. It might also not get here and give me my short too. But what I would need to see is a small move lower, or like at least one or two candles that have a nice large body close lower, and then for a price to quickly run up above that high from that swing lower, and then I can go short. This is actually too big of a body for this to be considered a short-term price swing, for me to then want to see it get traded up above. Seems like we're quite volatile this morning. Let's see if there's any more 10 o'clock news. There's some Fed members speaking. See if they're saying anything important about the economy. So I'm on the Federal Reserve Board home. This is an interesting article. I might read this. But Waller, I think, was one of the Federal Reserve governors that said that we should be cutting rates. Two Fed members said they should cut rates. Bowman and Waller. I think it was Waller, but I know Bowman did. And then Bowman said they should cut rates, and Waller did. And this is the first time in history since 1993, or 1994, I think, where at least one Federal Reserve member disagreed with the decision overall of the committee on what to do about interest rates, which is very significant, because that means that there's obviously a disagreement and a battle in the Federal Reserve. Usually they're always agreeing, they're looking at the same data, and they're saying the same things. So it begs the question, why are they disagreeing? I think it's probably political. They're probably trying to go after Powell's job, because Powell's term is expiring. And Powell doesn't have much power compared to the other members. He's just the person that represents the Federal Reserve. And obviously, to be the chairman of the Fed is something that's still prestigious. So I think a lot of the Fed members, are after that position. And that's why two of them might be disagreeing with the rest of the committee. But Waller is one of the persons that disagreed, and he released a statement on August 1st, and the opening line is, "At the most recent Federal Open Market Committee meeting, I dissented because I concluded that cutting the policy rate by 25 basis points was the appropriate stance of policy." In his speech, I remember reading the speech he gave July 17. He laid out the case for cutting the policy rate at the July FOMC meeting, and my views have not changed since then. However, what we see is, this was August 1st, he just released a statement. Now, I haven't read it yet to see how his views haven't changed and all that, but so far he's not right. So far the inflation, even though the Federal Reserve has not cut rates, the inflation is moving higher, as we just saw with this morning's report. So I think the committee is still doing the right decision, and I just think he's just saying that because he's after someone's job. Man, I'm coughing. See, we just got one more person in the stream. Welcome to the stream. This is nice. We have a nice move lower, and we have a 5-minute short-term low that got taken out. A short-term price swing higher got taken out, but we're above both the midnight 8:30 openings, so I'm not looking to trade. I'm not looking to trade long. I mean, like, I'm not looking to be buying price. I'm only looking to be selling price right now. But I got a lot of reading to do today about the economy. While we look at price, we could read this. So first, tariffs are one-off increases in the price level and do not cause inflation beyond temporary increase. Standard central banking practice is to look through such price levels effects as long as inflation expectations are anchored, which they are. Second, a host of data argues that monetary policy should now be close to neutral, not restrictive. GDP growth was 1.2% in the first half of the year and is expected to remain soft for the rest of the year, much lower than the median of FOMC participants' estimates of longer-run GDP growth. Unemployment is 4.1%, near committee's long-run estimate, and total inflation is close to our target at just slightly above 2%. If we just put aside tariff effects that I believe will be temporary, taken together, data imply the policy rate should be around neutral. I think he says this because a lot of the, like on July 17th, he said that a lot of the data is over-reported. And how when the Federal Reserve report their data, they always do adjustments in the future and they cut things down. So he says that unemployment should be a lot higher than it actually is reported to be, and that's his stance for cutting. But I don't know. I think he's just after Powell's job and he just wants to impress Trump. And this is out of 16 people in the committee too. This is only one person's opinion. So, and he says, my position does not mean I believe the FOMC should reduce the policy rate along a predetermined path. We can cut now and see how the data evolves. If the tariff effects do not lead to a major shock to inflation, the committee can continue to reducing rate at a moderate pace. If we do significant upsides to inflation and employment, we can pause, but I see no reason that we should hold the policy rate at its current level and risk a sudden decline in the labor market. And that's actually what you see. He's saying we shouldn't risk a decline in the labor market, but I'm pretty sure Powell has came out and said that the committee will only cut rates if there's a decline in the labor market. I think that they're committed to keeping the labor market healthy, but until they actually see the labor market not be healthy is when they'll actually I think at least that's when the only way they'll cut and actually change their monetary policy from being restrictive to neutral. They did cut last year, but that's only because the neutral interest rate was, I think it was rising, or it was not rising as much as they wanted it to. And if they had just stayed where they would be, they would just have been more restrictive. Whereas them cutting, they just remain, they maintain the same amount of restriction with monetary policy. It just kind of readjusted where their rates were because other factors were moving the economy and causing the neutral rate to not move up as much as they expected it to. So they still remained like just as restrictive as they were in COVID. It's not because they cut their rates at the ease of the market, right? The market is still just as restrictive as it was during COVID. But what Waller's arguing here is that he thinks the Federal Reserve should be neutral because they risk a decline in the labor market. So, but it is possible we could have a decline in the labor market, right? And I think that's the only way the Federal Reserve are going to cut the rates. Until then, I think they're going to keep them higher. They have no reason to cut them. Inflation's going up. Again, we have to wait to see what the next unemployment number is going to be in September to be more sure, but I don't see any reason for the Federal Reserve to cut so far. Or immediate reason. Push on about walk, can't touch me, I'm too hot. Under the inside of a vault, her remains covered in crop. And the reason right now I'm pretty comfortable knowing I'm probably not going to get my model for another 10-15 minutes because, again, what I need is a short-term high. Right now we're above 830 open, so I need price to do something like this on the 5-minute chart, right? I'm going to try and short this move lower. But before I short that, it needs to go like up. I don't know why it's like that. Let me zoom out. It needs to go up, make that price swing higher, and then it needs to pretend like it's moving a little bit and then come right back above that, and then it's going to go down. So that initial price swing lower, that's what I need to see. And I wouldn't, oh my goodness, what did I do? I wouldn't see this price swing over there, right, like that, as something where if we come all the way back above this, I'd short, because this is too much of a range, right? It needs to be something very short. So what it could do is it could come up here a little bit and then pretend to go down, and it could come back up and then run lower. And then I would use that as my price swing to find the qualifying sweep on. But the sweep would be up here. So I could go short anywhere from this high. I use a fair value gap. Somebody was asking me about turtle soups, and that would be a turtle soup. That'd be just selling when the high gets hit. As long as you have the bias and you're in line with the bias, selling 5-minute short term. If let's say your bias is lower on the higher time frame, selling 5-minute short term highs is high probability to lead into a reversal. So that's basically what I'm waiting for, 5-minute short term high. But I don't know if we're going to get that because we seem to be, putting a lot of pressure lower. And then now that we've come down here, if we hit 8:30 and midnight, I could look to long. It could look for, I could look for a price swing higher, and then for price to move beneath that price swing and go up. And I'd be getting in, in this area, or where the fair value gap's created. But I don't know if that's, I don't know if it's going to happen. We'll have to wait and see. God damn. I'm supposed to play basketball tonight. There's basketball this evening, and I really want to play it, but I keep coughing. I don't even have a headache anymore. But last 2 days were very, very bad. I had migraines, pressure headaches. It was very not good. Mm-mm. But now I feel a little bit better. I just keep coughing. It's the end stages. Hopefully it's gone by the end of the day so I can play basketball. You know what I want to do? I want to bring my GoPro and my Ray-Bans. So I want to play basketball with my Ray-Bans, right? And I did it yesterday. But the thing is, with my Ray-Bans, I'm always looking up. I'm not looking down. Let me actually clean them. So what I want to do, though, is hoop in my Ray-Bans so you can see my point of view. But then at the same time, I want to have my GoPro recording on the side so that I can combine both points of views. So I can have my Ray-Bans show, you know, the POV, and then beneath that I have what I'm actually doing. I want to like play those at the same time on the YouTube Shorts or something, so that people can see like what I'm looking at and what I'm actually doing and stuff. And I think that could be really sick. Because when I'm wearing my Ray-Bans, you can't see like the dribble moves I'm making, and you know, when I go through my legs behind the back, how I'm faking with my head or with my body. What's up, Nolani? I see I got 3 people watching. Only 1 comment. What's up with that? I wanna know who y'all are. How you doing, Nolani, this morning with your back testing? Oh yeah? Yeah, they lurking. I got some people lurking in here. I think they're just waiting for the signal. Oh, what's up, Ismail? How you doing? Nice to see you in here. Oh, Ismail. You trading this morning? I don't know if you trade CPI or not, or if you trade ahead of it. But if you do, you might have made a lot of money. I don't know, because that today is very volatile. You're waiting for the signal, huh? No, you got this. I know you can make your own money. I probably won't have a trade. I'm kind of like, I was hoping for a short, but it didn't give me the entry. It didn't? That's okay. There'll be another opportunity this week. You can go through your backtesting yet? Alright, if you give me another 15 minutes, I'll probably be able to tell if my trade will be there or not, and then we can go through your backtesting and see what you can improve on. My influence with the lap to the top. Bet. Too hot. About her mage coming in crop. Or sorry, my crotch. Rico in high tops. I go in Miami, Kawasaki with 2 thoughts. She fuck with the top. Cash out, ice me out. Oh, what the fuck? Alright, I'm probably not gonna trade. What the fuck is this? I hate it when this happens, but this has been happening a lot recently. And it stopped happening for a bit, and I had some good trades. And then every time this shit happens, where the Dow goes higher, and the Nasdaq is going lower, and the S&P is in the middle, it's always bad market conditions. Like, I always have bad... Look, you see? The price action looks the exact same ahead of this, right? It's basically the exact same. On a higher time frame, no. But then they do 2 completely different things. One of them goes higher, the other one goes down. And it's like, how are you supposed to be in a trade and trust what you're actually trading when one of the indexes that looks the exact same ahead of this is going the other way? Like, what? You know? So, like, whenever I see that happen, I don't trade. And it's just like yesterday. Yesterday, there was a trade I called on stream. I went long at 9:30 open after I didn't go long, but I called it, right? I'd say I marked out the 1 hour. It wasn't my model, so I didn't take it, and there was no news. I don't trade on no news, but I had marked out the 50% level. So this level right here, and then I noticed it bounced off from that. There was a 5-minute high there we took out. And then dropped down to the 1 minute. There was an inverse fair value gap that I've highlighted right here. So, like, and I had targeted just the London highs, buy side liquidity, right? Right up here. Yeah. And then you see how, like, it was back and forth, yappa, right? Like, a lot of consolidation here. And the whole time, every time it consolidates, the Dow is dropping. It's like seeking lower. Like, it's really going down. And then we have some consolidation. And when, when that happens, this consolidation, and we start to go up a bit, and it's when the Dow pulls back higher. But then the Dow starts going down again, and it consolidates, moves to the side some more. And then the Dow starts pulling back higher, and then the Nasdaq goes higher. So, like, the Nasdaq wanting to go higher is like pulling the Dow up. And the Dow going lower, though, is pulling the Nasdaq down, but since the Nasdaq is usually the stronger and leading asset, it still pulled the Dow a bit higher. And then it's like whenever these markets aren't agreeing, you always have worse conditions. It's always not as good to trade. And that's usually when SMT is also present, which is why I don't trade SMT. So, like, let's just say the Dow makes a higher high, which it did. And now let's just say back here at 940, it would have made a higher high. And then Nasdaq would have made a lower low, right? A lot of people might have said this is SMT, there's a reversal. But what would have happened is you would just had more consolidation, more pullback. And I don't like trading that. As you know, I like to trade perfect markets where all indexes are agreeing with each other. And I don't have to worry about, one of them's going up while the other one's going down. Like, I don't, I don't feel comfortable longing here. I mean, not that my model's not there anyway. So it doesn't really matter. But yeah, I'm probably not going to trade today. So, Nolani, if you want, we can call on Discord. I do have some people watching. So, I mean, I guess, I don't know, the algorithm today is liking me. So, I'll probably stay on stream. But if you want to call, we can go over your trades, and I can kind of show what that looks like. Going over like backtesting data and then seeing what you can change and tweak in order to make your model better. But just let me know if you do, and we can call. Otherwise, I'll just end the stream and then we can call. But if you don't mind staying on the stream, just let me know. I should just text you this. I don't even know if you're still watching. Alright. Yeah. We'll probably end the stream. My student's getting food. I'm not gonna wait for it. I'm gonna end the stream then because I really don't think there's gonna be a trade. And then I'm gonna go on to do my own things. But yeah. I wasn't really expecting too much today. It's possible my trade's present on CPI, but a lot of the times it's not. So I'll be focusing, as I said in the beginning of the week, on Thursday and Friday. Tomorrow there's no news, right? Yeah. So I'll probably stream again tomorrow because there's no news. See if I can catch something on stream. That's usually when I try and call things. Whenever there's no news. But anyway, yeah, thank you for watching, everybody. Thank you for dropping in. Thank you for everybody who liked the stream. I know this wasn't really a long stream. I didn't really do much, but yeah, it is what it is. Sometimes price doesn't want to give you some apples, and when price doesn't give you apples, you look for the lemons. I don't know what I just said, but it is what it is. Anyways, peace out.